Welcome back. The Federal Reserve is set to meet again today, and despite growing pressure from the White House, it is not likely to lower interest rates. Now, here's the journey so far. The rates remain unchanged so far this year, even amid near constant badgering from President Trump for the Fed to lower them. Let's bring in senior business and technology correspondent Jo Ling Kent in our Washington bureau for more on this. Jo Ling, good morning to you. Great to see you back. Help us understand why the Fed is not expected to make any changes to interest rates today. We know that you will be there in person. What do you expect them to explain?
Errol, good morning. Yes, we'll be putting some questions to Chair Powell at the Federal Reserve today. Essentially, it's a wait-and-see mode for the Federal Reserve for their FOMC meeting. We expect rates to be held as the Fed tries to parse through what tariffs could be doing to the economy. In addition, we have to look at the bigger picture here, as always. The economic picture is a mixed bag. We had, GDP falling into negative territory, but also the jobs report beat expectations. Inflation is doing better than expected. Corporate earnings are strong, yet you also have consumer sentiment the weakest at the second lowest level on record. And so as we look at the job market and inflation, that is where Chair Powell and the entire FOMC will be looking to make that decision. We also expect rates to be held again come June, and then possibly, according to the CME Fed tracker, rates could be cut in July.
It's really interesting that you lay it out that way, Jo Ling, because you say could be and you couch it because so much could happen between now and then at their next meeting. And we know that the Trump administration has continued to add pressure and the policies themselves are just starting to bite. So help us understand how the tariff war and how it impacts trade could change the Fed's decision soon.
Well, economists, by and large, Errol, believe that prices will go up if tariffs remain the same or even if they are reduced, that growth could decline. And so that would impact the labor market. That would impact job creation. That, of course, would impact prices as well, of the price you pay when it comes to retail and groceries, things like that. That is what the Fed is looking at, those two really important pieces of data, right? Jobs and inflation. And so as they parse through that and see what happens here, the real fallout, so many small business owners are telling us, will actually be coming in the coming weeks when it comes to these tariffs. And so we're still in a wait-and-see mode in terms of what actually will impact and hit. Will negotiations and new deals be struck by the White House? But so far, it seems like that is very slow going, a lot of uncertainty out there. And that uncertainty is something that's still, it faces all of us. It faces small business owners, big businesses, and of course, the Federal Reserve. So they're taking in all of this in real time, just as we are.
Yeah, we know there are fewer container ships coming from China to many of the U.S. ports. Not a good sign for those who need their stuff. Jo Ling Kent, great to see you joining us from D.C. this morning.
Thanks, Errol.